Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, August the 26th, 2025. As you know, today is Tuesday, Gary's Market Forecast or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the ES, we have some overnight action. I wanted to switch things up a little bit. We normally start with the dollar index, but we're going to start with the markets first, give it a little fresh coat of paint, and talk about where I think the markets are headed first. Then we'll go back and pick up some Forex at the end and the dollar index. I think most people are probably interested in the markets at the moment, especially after Mr. Powell's little jawboning about potentially cutting rates. We got that big whipsaw move up last week, and then since then we've been pulling back. So we want to keep a keen eye on this little support zone, which happens to be from the recent high to the recent low. It's that 618 area. So we want to see if we can hold that little box here. If we can, then we're likely going to go up and make all-time highs up here at 65.30, maybe as high as 65.48. We break that, then we can open the door at our 6,600 up there, which I do think we ultimately going to reach. But since this little price action, if we don't hold this little zone, especially that prior high right there, let me get my big cursor over here, that prior high right here, if we don't hold that, then we're going to make yet another new low. And we talked about that last week. And we talked about we're probably going to go in and make a new low. Well, we got basically a double bottom before Mr. Powell's little, we could potentially cut rates at the next meeting. He didn't commit, but we know how that is. He doesn't always commit. He just kind of says things, and the markets loved it. Yeah, we like the idea you're going to cut rates. Well, guess what? If he doesn't, the market's going to be very disappointed. But since then, the last couple of days, we've been pulling back. So let's drill down to like a 15-minute, and we can look at some critical price action. I'll condense this so we can see the latest right up in this area. So this box we've been talking about represents the prior swing point as you drill this down. And we had a break below the Magic Fibo, which is this line right here. That's the Magic Fibo. We broke down, then when he announced, yeah, we might actually cut rates. I could start to see the idea we might think about cutting rate. The market's ripped up. But if we don't hold the support zone and we start closing below that 64 and change, it's like Fibo line right there, about 64.20, then it looks like we're going to go on and make some new lows. So that prior high right here, let me do that again. My arrow did not function properly. That prior level right there, which we came down, tested, came down, tested, came down, tested, and tested email, and then tested. We did make another push lower. And then what? Mr. Powell says we might potentially look at cutting rates, and we pop. But notice we've been grinding lower into the support zone. which again, why is it important? Well, off the recent low, and this is on a 15 minute, so I'm kind of looking different levels based on different time frames, but this prior swing point low up to the high, 1 second while I get that up there, from that recent low to the high, you can see if we start breaking below this, look where the 618 is. That's why I was talking about that prior high level. So Emil, James, Ian, Mr. Tucson, if we actually see price not continue to break out and we actually do start coming back below, say, 6,400, kind of give it a little room where this box is, if we start breaking below that, then it's screaming we're going to make a new swing point low, and you can start targeting 63.45, 63.28, and likely we're going to move down towards 6,300. So why is this important? Because if we start to break 64, the door is ajar to go down about 100 points. And most people that trade ES minis, they die and go to heaven when they get a point or two. Well, this is a high probability we don't hold that support zone right there. We're going to go down about 100 points. And during that journey of 100 points, I'd start to focus on 63.45, followed by 63.20, followed by about 6,300, right? We don't necessarily have to come to 62.82, but it would spell that we're more likely going to break down. I'm not convinced we're still going higher. This overlapping, chopping, grinding levels does not bode a lot of confidence that we're ready to go busting out, but this is the critical support zone, right? So make a note. If we break 6,400, 64.05, 64.10, just in that zone where we were testing multiple times in this area, we start breaking below that, then it really opens the door for us to target 63.45, 63.28, and 6,300. So basically we take out 64, more than likely we're going to go down to 6,300. Fair enough? What else don't I like about this? Well, zoom in on this current price action. We were above the 15-minute during the Powell speech, right? When he said, yeah, we might be able to cut some interest rates. And that went up. And ever since then, we tested it and couldn't hold it. We broke below. We've tested it, broke below. We tested it, broke below. We're still testing it right now. So unless we can start to pop and go breaking above basically 6,500, then it sets the tone. We're going to make a move toward that 6,600. So the long of it, we take out probably this little battle zone here, about that close to 6,500, 6,590, 64.80, 64.85, that swing point. If this can hold and break out, then we're likely to go on and make new highs. And what are those new highs from? I'll have to condense this, but there it is off of the prior high down to the recent low, which I'll swing that out, puts us about 65.30, 65.47. And even though from that high to low, we did take out the 618 and the 786, current price action is still questionable. So be careful. It's a good chance if we do rally and hold this. And again, we go breaking out this swing point. That's why I was saying about 6,500. So we can break the prior swing point. So we hold here, grind up, we break that. Then we got a 30-point move, 47-point move. And then the next target would put us about 100 points, right around that 65.97. Everybody see it? So Mr. Tucson, are we going to, from this jawboning to this retracement, are we going to hold that and go breaking out above the prior swing point? If the answer is yes, Then it says bullish pattern, very likely going to go on. 75% chance we're going to go to 65.30. 70 plus, we're going to go to 65.47, and likely even going to push toward that 65.97, 6600. Amen? But if this rally fizzles and we start breaking lower and we break below that prior swing point, looking at price action, when we broke down, we rallied back, we broke down, we rallied back, we broke down, we rallied back, we broke down, we rallied back before his announcement right there. So if we break that, then it's not looking good. Amen? All righty. So let's go back to the daily. Big picture. I still think we're going to get that blow off top before we're done. Still see a lot more upside before we're done. This little rejection wick is looking good so far on the daily. Doesn't mean it has to hold, but that's part of the process. If this respects that level, then highest probability we go on to 65.30, 65.47, and probably even be a little bullish going up towards 6600. If we don't hold the support zone, then it means we're likely going to go on and make a new swing point low. And that new swing point low would start to target 63.45, 63.28, basically going down to 6,300. So I think a high probability if this doesn't hold and we close below, we want to see some candles start closing below that 6,400 area. We see a candle, especially a daily candle body, then the inevitability we go down towards 6,300 is extremely high probability. Now, what if this rally fizzles and we can't go breaking out and we continue to push lower? That's why 6,400 is critical. We don't hold it. We start closing below it. Look out below, down to 63. We don't hold 63. The door's ajar to go even further. And you can see these boxes we put on here. That's where the daily Magic Fibo is, that line, and a little target zone. So if we don't hold 6,300, then we got another couple of hundred points. We'll look for this thing to start moving lower and ultimately look for 61.95, 61.50, followed by potentially, right now you can see the Magic Fibos between 6,061 and 6,019. That's this line. Could this happen where we get this to fizzle before we then go breaking out? Sure. Remember about the markets. It can do whatever it wants to do. It typically does some things that you don't expect it to do. But that's why the technical picture is what it is. You have these levels. If they break the levels, then the probability is very high. We're going to go on and make a new low. If we hold it and we can break out that last little swing point around 65 where we rallied to and failed, started testing again, failed. So if this thing rallies and breaks out, then it's onward and upwards, 65.30, 65.47, 65.97 area. Amen? If we don't, and we break below 64, then look for us to start to go to 63.45, 63.28, followed by basically 6,300. We don't hold 6,300. We got another 100 points down to the next Fibo, about 6,200. And if we break that, then we got 61.50. And we don't hold that, then it's just screaming we need to come down to the Magic Fibo. It is pushing upwards. You can see the slope. So maybe we break through this level, start moving down to this level, and take a few days to do that. And the Magic Fibos in that area, and we just come down, beautiful bounce, for us to then go on and make our blow off top, which we've been looking for. I don't think that prior high was it. I said that the other week, and I talked about looking for a new swing point low. We did coming into the end of the week, as we went through last week's classes, looking for a new swing point low. We got it. And then Powell popped. But even with the pop, that's why you look at this, it's kind of iffy. That's why I drilled down to these lower time frames, and it's struggling to break above this 15-minute Magic Fibo, right? It's struggling. You think, ooh, that's a breakout. No. So we want to see some candle bodies close above here. This is only a 15-minute. But if we start failing and we start taking out the prior swing point low and we start moving, likely we take this swing point low, which is around that 63.30 area, 64.30 area. We take that out, then we're going to test at 6,400. Right? That's that main part over here. So be careful. I would not be loading the boat expecting this to go ripping higher. I want it to prove it. Hey, baby, prove it to me. Then we'll talk. And if we can't hold this, that's bearish, right? We tested it, tested. We're testing it again. And if we can't get this rally started, and I don't mean just pop up a few points like it just did and start pulling back, but if we can't go breaking out above this prior swing point, former support, turn resistance, turn support, turn resistance, that's where that upper number comes in. So yeah, we rally it up here and we break the high, 6,500, game on. If not, we don't hold this, we break below 6,400, which we start breaking this 64.30, the probability we go to 6,400 is extremely high probability. So it depends how you want to trade this. Am I scalping it, trying to get a point or two and get out? Or am I trying to play it for a few days? Depends on your strategy, but this is the technical picture. Moving into NASDAQ, kind of the same thing. From the 15-minute, it's struggling right around that 15-minute Magic Fibo. We have the same kind of setup where prior high, we dip down, Fed speak. Ooh, we might cut rates. Market popped. We came down very close to that zone and bounced. But since we bounced, what are we seeing? A lot of chopping, overlapping price. This thing isn't just ripping higher right now. So if you're a NASDAQer and you like to trade it, by all means, I look at futures because they have overnight price action. Whereas you look at the indexes, they have gaps down, gaps up, depending on how it works. That's why I like to see all the price action I can get my hands on. So it's similar type of process. If we can go breaking the highs, then we're likely going to go break out. And we'll pick this up on the daily in a moment to give you those targets to the upside. But you would look for this thing to go higher. But if this chopping, grinding can't hold this 15 and we start breaking the swing point low, which ties in with this prior bounce, then we're going to make some new lows. So basically this level right here, that red line, which happens to be a Fibo line, but it was former support, turned resistance, 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 resistance. And it was until Powell said, maybe we can cut rates, that market popped. But ever since then, we've been grinding. And even since you think, well, maybe that was the little move and that's the end, and we're ready to go blasting off again, we're struggling. So be extremely careful here, ladies and gentlemen, because this is not necessarily telling us we're ready to go blasting off. Amen? And since this swing point low, what do we see? Overlapping chopping. So I'll zoom that in so you can see what that looks like. A lot of overlapping, chopping, grinding. So it doesn't mean, well, does that mean the NASDAQ, there's no way this thing can go breaking out? Sure, it breaks that high. We go to the daily chart. We got some more upside. I talked about this many times. I think we're going to get up to that 25, 26,000 before we're done. But in the interim, once we take the high out, then we start targeting our 24.3, 24.350, onward and upwards, 25. This is where I think we're ultimately going to turn around before we're done for the bigger correction. But until then, is price going to hold to warrant another push higher, make all-time highs again? Or is this thing going to falter a little bit more and go making some new swing point lows as we start pushing a bit lower? Fair enough? So the long of it, let me give you some numbers. I'll go back to lower time frames so we could focus on those, bring this into perspective. If we can start to break above 23,620, 23,630 area, basically where we grinded and grunted. So if we can start breaking above this zone, going to split the difference about 23.6. We can close and start closing above that, taking out the swing point high. And I don't mean just a quick wick and a rejection. I mean some candles, especially on a 15-minute. I want to see some candle bodies start closing above here. You're talking a 15-minute. Once it does it, then it sets the tone. We're going to grind back toward all-time highs and push to new highs. That's quite a move. Hundreds of points for that to take place. Now, if this can't hold and it just keeps chopping and grinding, and we start to take out this battle zone right here, which is roughly about, let me get my crosshair on there, take this out of the way for a second, get the crosshair on there. If we start closing below 23.4, where we dipped below already and been testing a little bit, if we start closing below that 23.4, then the door's ajar to go down in the neighborhood of about 400 to 500 points, making a new swing point low. Everybody good? So what if, William Bruce, this thing fizzles again? We just kind of chopping in here. We got a series of lower highs. And with this bounce still at a lower high, and this could chop in here another lower high, and we start breaking down. You break the magic zone, this battle zone, what we just discussed, then the door's ajar to go on and make a new swing point low, which again will be a few hundred points, and we'd start targeting this 22,900, followed by 22,947. Any questions? So since the chop, Powell speak, we've been making a series of lower highs. So far, that price action is not extremely bullish. That's why we want to see it break the trend line, break the swing point high, then game on. We're going higher. If not, we keep chopping, fail, start closing below the swing point low, start pushing toward this battle zone, and we start closing below that area, then it's likely we're going to make a new swing point low. So those numbers are major battle zone about that 23,003 area, 333. I like to give it a little wiggle room because I'd like to see it start closing below this area. So say we start closing below 23,300, which is just under 200, a little over 200 points. I know that's a lot, but this thing can certainly rip and close below quickly. But if it does, then expect a few 100-point drop to make a new swing point low. If not, and this thing can rally enough to start closing above 23.6, then it's game on. We're likely going to go up to 24. So you're targeting several hundred points to get to some of these new extensions at all-time highs. Amen? What about the Russell? Russell's trying to hang in there. Is it going to go break out? It's starting to look a little bullish from a little bit higher time frame. And that is, as I zoom this out, from that prior high to low, we started bouncing back into this all-important zone. and we broke above that prior swing point. So when we topped out, came down, test, 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 failed, bottomed, did this recovery, we were stuck in the zone. And that's why we had a lot of potential for this thing as a cover. I had as an insurance policy, I still have it, that if this thing breaks down, we could see some massive sell off in the small caps. But this latest price action, we actually broke a new swing point high. I'm watching to see how we continue. Do we hold this or do we give it right back up? But if we can start closing above that swing point up here, candle body, not a wick, then it wants to talk about us going to 25.92, maybe even push up toward 26.90. So we're at the verge of testing. Do we go more bullish, make some new highs, or do we chop in the zone and continue to fail, ultimately looking for this to go lower? So this looks a little bit more bullish because it's holding up very nicely. It broke that last swing point, but there's a big difference in breaking this and truly meaning we're ready to go extension hunting until we see us close above the prior swing point, which happens to be that same battle zone as this little here. And if we can close above that, then it's all-time recent high there of 24.80. And we break that, then we got 25.92, roughly 100 points right there. Boom. So I'm not extremely bullish, but I'm watching it closely. And the reason I'm not so bullish is the Nikkei. We say, what's the Nikkei got to do with anything? Well, I use it as our global liquidity. And if this can hold, we basically got a bounce. We broke the prior high. This was very bullish to open the door to 45, 50. So we're in that 45 to 50,000 range. You can see my big pink box up here. Somewhere between that 45 and 52. Once we get into the zone, I think we're going to go somewhere between 48 and 52, kind of fine tuning this target. But if this doesn't hold, right, what is it talking about? That prior high that we failed. We broke out, we retested, we broke out, we're testing and testing. But if we can't hold this and we start breaking down, then we got this little cluster in this area. And if we don't hold that, then we're likely going to test the Magic Fibo. But if we see this, Mr. Tucson, email, we start to see Nikkei. And you say, well, Gary, I don't trade the Nikkei. Just use it as a barometer. If we see the Nikkei start pushing lower and we start moving toward the Magic Fibo down here, so we're talking a couple of 1,000-point drop to get near about 40,000 to retest where the Magic Fibo is sitting around that 39 and change. So we start to see that, then I suspect you're going to see the ES, our risk on, risk off assets, which are ES, NASDAQ, and of course, Bitcoin. Amen? We start to see that, and this doesn't hold and start bouncing, then I suspect Bitcoin's going to pull back lower, and I suspect we're going to see ES and the NASDAQ pull back like we talked about. So keep an eye on this. I don't see ES ripping to all-time highs and just shoving, ripping higher. I don't see the NASDAQ ripping higher and Bitcoin, all three ripping higher while this baby starts declining. Kind of gives you the global flow of cash and the global liquidity. And when it doesn't flow, it makes our risk on assets like ES, NASDAQ, and Bitcoin less likely and more likely in this case to go down if this can't hold. Now, this would be very bullish, obviously. We broke the high, we came back, retested, and can we hold it to go on and make new highs? Well, the inverse is true as well. If we do go breaking out and we start pushing into 45, 46, 47, start pushing towards 50, then clearly ES is going to go ripping higher, NASDAQ is going to go ripping higher, and Bitcoin is going to go ripping higher. So I'm watching this with a keen eye, expecting to see if this breaks down, our markets go down. If this breaks out, our market's going to go higher. Amen? Any questions on that? So that's why I'm very cautious about looking at ES and expecting, well, we're definitely going all-time highs. Yeah, I agree with that statement. But is it today? Is it next week? Do we get a big sell-off after Friday's core PCE release? Is it going to be disappointing? What Mr. Powell said about potential rate cuts, what if the data comes out on Friday and says, not so fast? That we could see that big disappointment sell off and we could see a new swing point low. That's where these targets come in. Amen? So up and until this rally looks good, nice rejection wick, and it's a doji at the moment, looks good. That we could go up to 65.30, 65.50 area. Yeah, that's the plan. But if we can't go breaking out and we can't hold support, then new swing point low is a high probability. So that's where that 64 comes in. What is that? From the low to the high, your 618 level. So what's this trade strategy? You look for things that are trending. You look for your pullbacks. You get a pullback. It breaks the 618, 786 zone. And we start to look for it to go up to the extensions. So just based on this, with Mr. Powell speak, we did that. So we still have a greater chance we're going to go up here. But instead of going all in now, I want to see it take out the swing point, and I'll take the last piece of that pie. That would be extremely high probability outcome. This, since the price action of that bounce doesn't look very bullish at the moment, right? We came up, got a lower high, pushed lower, we tested, got another push, and even on this little bounce here, it's still well below that prior level. It failed twice. Tried to go here on that day, the next day tried, and nope, closed down. And that's why we drilled down to a lower time frame, 1530, to kind of get an idea. And when you start to focus on these lower time frame and you bring in your Magic Fibo, which will pop here in a second, and you bring that into the spectrum, it kind of looks like, well, there's your pop, and then look at it. Chopping, grinding, chopping, grinding, chopping, grinding. So if you're scalping this thinking, well, we're going to go up, make some new all-time highs, I'm loading the boat here because it's absolutely going to go up there. It might. It could. But I would definitely be in a position of authority so that if this thing does fizzle and continues with these lower highs, lower highs, lower highs, first thing we got to do, and this is the least strongest indication, is a trend line. It's the weakest of the technical analysis. It holds true a lot of times. But we could rally into this and fail yet again and continue at the lower high, lower high, lower high, lower high, lower high. So that's why I have alert. We break below 6,400, we're going down to 63. That's my humble opinion. And first target when I start focusing, when I close below 6,400, where am I going? 63.45. Second target, 63.28. Third target, 6,300. If we do break out, then I want to see a commitment where we go breaking the swing point, which if we break 64.80, I think we'll definitely go test 6,500, which is that swing point. But that's why if we clear that hurdle, then we have beautiful move higher toward that 65.30, 65.47, and upwards towards 65.97. So be careful. Another reason to watch in this area, if you zoom in, which we like to do, if you zoom in on the latest pop, and I'm going to stretch this out for you, and I'm going to bring this down, but if we look at the recent high to the recent low. So from that high to this low, and this is on a 30-minute time frame. When do we start to get bullish? Well, we need to take out the 618, 786 zone. And notice how the 786, Ian, James, Mr. Tucson, it's right at these prior swing point. Tested, failed, tested, failed, went lower. Now we're chopping and overlapping. That doesn't give me a lot of confidence. This is definitely going to go breaking out. But when we start closing, breaking the 618, 786 zone, and we start closing above that, then yeah, that does give me confidence. We're going to go visit in 6506 and start to move on this lower scale, right? So force price to prove itself. The idea we bounced a little bit does not mean we're breaking out. We have to take out this zone. So in these lower time frames, put your little box up here between the 618, 786 zone. This is going to be tough resistance. So if I'm scalping this and I get my points and I don't want to be greedy, pigs get slaughtered. That's about the only thing I believe in Kramer is that statement. That is true. That don't expect this is going ripping up. Well, I'm sticking in it, man. That's another 50 points to get up here. Sure. I want all 50 of them. Well, this price action is not very bullish so far. Since the pop, we've been chopping, overlapping. Since this bottom, we've been chopping, overlapping. That's still corrective. Corrective against what? Probably more downside. Amen? So this swing point, what did we say in our class? We said Bitcoin's likely to head to 110, 108. How was that call? We'll check on that in a moment. How did Bitcoin do on this scenario? Did we reach this level? We shall see. But here, ES likely headed down to the 0.618 level. Said that the other day from last week. ES and NASDAQ. We'll go over here and we'll check it out. And what were we talking about? We're talking about the prior move going in last week that we were likely going to have this retracement toward that 618 level, which you can see from the prior low over here, 618, 786. Prior low, we'd do a 618 type of retracement. Where did we go? Right in that zone. Can't make this stuff up. Went right to it. And I got too many lines on here, but I'll take some of these off. That's just showing those bigger targets. But I'll show you what we're talking about since this is a smaller time frame. From this recent low up to that high, where did we go? Right in that zone to test. So we came awfully close. We reversed. And this chopping overlapping is not very bullish right now, that we're probably going to break down even further to test this bigger box down here, which puts us about 6340 down to what? 6300. Doesn't that number come into play, what we just discussed a minute ago? Why I have 6300? If we break 6400, where are we going to go? And we could do incrementally 6345, 6328, and likely going to go down and test that 6300. So this is why I'm still bullish, potentially, for these upward targets. I even stated that we were going to go to 6,600 before we're done, at least, for that blow off top. And we got to 65, reached the target from the prior week when we had the high and low. We went to our extension, hit it beautifully, and started to retrace. And now we still have a lower high, even with the Powell mania. Yeah, we might cut rates. It's still at a lower high. That's not bullish. It gave up. That's not bullish. So until price proves otherwise, we break that battle zone, then we could talk about 6506, 6514, 6530. And yes, that would put us in the highest probability we're going to go visit 6530, 6547, right? but lower highs on these lower time frames. So you focus in on this price action right here from the prior all-time high down to the correction to this bounce. We're at lower highs, lower highs, lower highs, lower highs. That's why current price action on the hard right edge is not very bullish until it proves otherwise. So in closing, you close below 6,400, put a note sticky, set an alert. You can do it through this platform or any platform. I want to know when price closes below 6,400 because I know what the plan is to go short, shoot for 63.45, target 2, 63.28, target 3, 6,300. If not, and we do break out, then you know what the targets are to the upside. So we got the long of it, we got the short of it. Now, most importantly, you go over here to the software. And the software, this is on the ES30, US 30, that's the Dow. We got the S&P, and the software is extremely overbought. We've been slingshot palooza. My weekly's extremely overbought. Trend momentum PAI, extremely overbought. Topping out, losing momentum to the upside after the little Powell pop, still struggling, and daily's overbought. This is why I'm not extremely bullish short term. Monthly, even our monthly is extremely overbought. Now, just because these indicators are above the overbought level, that's this 80 on this PAI, price action indicator, the only AI you need to know about is PAI. And then the trend momentum, this is still up. So that's not saying, ooh, it's definitely going to go crashing because these are overbought. It's when it turns and hooks the time frame cycle. So when we got this monthly hooking across during the tariff talk, what happened? The weekly cycle down, right? A weekly cycle down, weekly cycle down. So I'm watching that closely. Do we get another monthly hooking across? If we do, we're going to get a bigger pullback. So what if the weekly hooks and cross? Then the daily will cycle, right? Last time the weekly hooked and crossed, the daily cycled down. We got that beautiful retracement, and the daily went oversold. So that's the uniqueness of this software. No matter what time frame, monthly hooking across means the weekly cycles. Weekly hooking across means the daily cycles. Daily hooking across means the 4-hour cycle. 4-hour hooking across means the 1-hour cycles. And for those of you that trade options, it gives you a time frame. It takes roughly 2 to 5 weeks for a daily to cycle. It takes about 2 to 5 months for a weekly to cycle. It takes about 2 to 5 years for a monthly to cycle. It takes about 2 to 5 days for a 4-hour to cycle. So if I'm expecting with a hook and a cross, and I got a daily hook and a cross, and I'm looking for my 4-hour to cycle, whether it's hooking upwards and it cycles up or hooking down and it cycles down, then I know I'm going to be shooting for options at least a couple of weeks out because it takes about 2 to 5 days on average for a 4-hour to cycle. Or if I have a weekly hook and a cross, I'm looking for a daily cycle, then I need to use monthly options to go out a few months because it takes about 2 to 5 weeks on average. So I would go out a couple of months, give it a little time for that to play out. Fair enough? So be careful. We drill down in these charting platforms for a reason. We're looking at this latest price action. You zoom that in, and even with this pop, it's at a lower high. We got the trend line, lower high. It's struggling. That's why you got to force price to prove its intentions to then warrant going long. If you got that bounce and you made your points, I would be locking in profit because until otherwise, we break below 6,400, that's a beautiful short, in my humble opinion. Amen? No buy, sell, to hold recommendations. I'm not a certified financial planner. If you need someone to tell you exactly how to do it, then seek the advice of a financial planner. Mine is to read and interpret price on a chart. It's a God-given talent. You can go back through the archives over the years. which we love about our service, right, Emil? Over 90% of all of our members have been here for over 10 years. Celebrating our 15th anniversary. That's incredible. 15 years has already passed. But I love going back to some of those old archives when we talk about where price action's going, give technical levels. We give you a primary position or the direction we think it's going, and what if it doesn't, and we give you an alternative where it's likely to go. So that's what we drill down on. We break above that prior swing point, this pink box, we're going higher, 6506, 6514, 6530. We break below 6,400, we're going down to 6,345, 6,328, likely even going to push down to 6,300. Amen? I know I'm continuing to rinse and repeat, but the NASDAQ looks very similar. This looks very bullish, right? Woo, it's all Powell speak. But what has happened since that pop? Kind of bring your arrow over here and drill down. We got lower highs, a series of them, and even this newest pop is struggling. So up and until price starts to break out, then you go long. Until then, while we're continuing to chop and overlap, if we don't hold this area and go breaking out to go long, and we break to go down, then the door is ajar to go several hundred points to the downside. So we don't start holding that 23.3 area, and we start closing below this little battle zone, then the technical picture is screaming, we're going to make a new swing point low below 23. That's what it's telling me. So we're talking, we start closing below 23.3, that's 300 points to get to a new swing point low, and opens the door targeting the 22,990. Amen? So there you have it. Keep a keen eye on this. This bounce, I even said going into last week, any rally should be sold, and going into the end of the week, was that spot on? Any rally should be sold. Any rally should be sold. Any rally should be sold up and until Powell speak, and that happened. Well, this isn't over. This looks like a bigger type of three-wave correction, and that could warrant more downside. So force price, again, 23.3. We break below 23,300 and close below, then start to look for a new swing point low. Amen? All right, any questions? And let's continue with IWM. Most people trade the Russell with the IWM. Now this one, I mentioned a moment ago, it looks a little bit more bullish. On this latest little pullback, we did reach the extensions, and we're hovering right at that 235 area. And since it pulled back, we can go to the lower time frame. We can see it on this bigger Russell here. We retested the prior breakout, and so far we're trying to hold it. So where does that leave us? The most recent move, and Emil says, cheers for a great service. I appreciate that. You know, we love and appreciate you, and we'll always be here to help you. High to low. We're testing the magic zone as we speak. Testing the magic zone. So if we can start closing above 2366, say 2370, a little consolidation zone here, then what are we targeting? 2382, 2388, 2400. Boom, right there. If we fail, start pushing lower, we don't hold the magic Fibo, then we're going to start breaking down. But I'm very leery about this Russell, because when you start to look at the Russell years out, right? It's unlike the ES, NASDAQ, etc., because when 2021 over here, when we topped out, we got a big pullback and we never really broke out. Where ES during this period were making all-time highs, all-time highs, all-time highs, and this just chopped for a long period before it finally got one little head fake and then tanked. So I made a bold statement. I don't do predictions. That's for the prophets. But everybody else, your weatherman, your sports forecaster, everybody and their brother. I predict this, my prediction, my prediction, my prediction. I give a forecast. I give expected move. I do everything but predict. And I can anticipate with the best of them. So this does not look real bullish. It's a lot of chopping, overlapping action. But in the short term, if we can break that level, then yeah, we'll go a little bit higher. But I said before we go breaking 2,600 and higher, we're going to break 1,600 and lower. That's this big consolidation zone here. So that's a big gap between 2,600 and 1,600, obviously. And if we can't go breaking out this way, then we're likely going to go breaking below that swing point. And all this chopping, overlapping price action has a higher probability that's going to take place than that's going to take place. So there's levels and limits where you look for in a technical picture. And we're still at lower highs, double top, if you will, right at it, lower highs. So even though it looks a little bullish short term, longer term, it's not that bullish. So I'm looking to do a credit spread out when we finally get this blow off top toward the end of the year. We're looking to do a credit spread to come way down where we're going to go below 160. And the higher we go, the more we have to get down to go to below 160. And that's 1600 on RTY, and it's the 1600, basically 165, 160 area on IWM. So the same thing. All this chopping, overlapping price action is not conducive to this thing just ripping higher right now. It's more conducive to a breakdown, make a new swing point low, and we're targeting somewhere around that 140 to 120 level. Once this last little move is done, start breaking down as we go into 2026. So I'm not talking about the next few minutes, next few hours. We're talking over the next several months. This thing should start breaking down. Fair enough? So once we see price action starting to confirm it's breaking down, we can then do put spreads out to 2026, 2027, give it plenty of time. And I'm looking for this to go down numerous points to break below 160, targeting 140, 120. But we drill to the lower price action right now, and we can see when you drill and zoom in, this looks a little bit bullish in the short term. Come back over here, because on RTY, we came back to retest the breakout zone. On this IWM, we haven't dipped quite enough to reach that just yet. But until we go breaking new highs, then we look for another target. And what is that? Well, just like we did with this high to this low, we took out the 618786 zone on that candle, and where did it go? 75% went to 228, 70 plus 230, and where did it go right to? Boom, right to it. Amen. And we even drilled just shy of the 1618. Typically, after you have a move that reaches these extensions and continues even more, you typically get some sort of pullback. Well, we did reach the targets, we did get a pullback, and we popped one last time. And what was that? We broke out, we retested the prior breakout zone, and then we went to the next extension. That was short-term bullish. Now I'm thinking maybe we could. So, Emil, what's that look like? Or even on the shorter term, this is what I was saying. Maybe we get a little bit more. We did it again. From the swing point high to swing point low, we reached the 1448 to 1272, and just shy of that 1618 yet again. What happened when we did that last time and we broke out? We got a pullback. We rinse and repeat, went to the extensions. Typically what happens after that, Very small chance you just continue to grind higher and higher and higher after you reach your extensions. That's why you take profit in these zones, because typically you get another pullback. So I'm looking for this to come down, and it's just shy of that prior high, where last time we tested it, kind of held for a few days before we dipped below it, right? Prior high. Well, we're not even tested it yet. Amen? So let's go to like a 15-minute really to drill down. Now look at that price action. Is this extremely bullish since this last breakout? Well, you tell me. Got the high, got the low. We're testing the 618 level and failing so far. So here's my resistance zone on the latest price action on a 15-minute. It's 234 down at 234.30, 234.78 area. So far, we're breaking down. Is it possible that that was like a three-wave move? It doesn't really look right, but maybe. And this could be breaking out where we go to 235, 236, maybe test 237 up there. It's possible. But until price action actually starts closing above this 234.78 zone, then by all means, we close above that with some candle bodies, not just one, because you're talking about a 15-minute, not a daily, but candle bodies close. We get a few candles to start closing above this area. Then by all means, we can start targeting a good point or two up here, 235, 236. So Gary, that's not a whole lot. Depends how you're trading it, but yeah, futures, you can do fairly well. And certainly ETFs, not a whole big movement, but that's short term. That's why I'm looking for more downside. Since we reached those targets, we've been struggling. And even this, do the same thing we did with the others. It looks somewhat bullish, but we're getting lower highs. We're getting that series of lower highs with some spikes in there. Lower high, spiked up, but where did it close? Lower high, spiked up, but where did it close? Lower high. So I'm not convinced this is ready to go breaking out. So tie in the Nikkei. The Nikkei continues to break down. That's going to pull our markets down. Nikkei goes breaking out. That's going to push our markets higher. So you got your levels, you got your resistance zone, and you got a barometer in which you can watch to see what it's going to do. So this is more likely, if it doesn't hold that prior breakout zone that it's retesting, then I see more downside. And if we get a lot more downside on the Nikkei, then this guy is going to fizzle just like ES, Bitcoin, the risk on assets like ES, NASDAQ, and Bitcoin would follow suit. Fair enough? All righty, let's continue. What about black gold, Texas tea, the Beverly Hillbillies? Still think we're bearish on this. All right, we've been talking about this for let's go to a daily, several weeks to months on this overall price action. But you hear that same story I keep referencing, and I'll just consolidate this for now. We've been getting a series of lower highs, a couple of head fakes where it looked like it was going to break out, but still at a lower high. Look, I was going to break out, still at a lower high, right? Even though these head fake breakouts. So we talked about this after the big run, and then they bombed the nuclear sites, and this thing went ripping, and then it went back down when they reached the peace agreement, blah, 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 and oil prices came down. Well, we took out this all-important battle zone, that prior support zone, back in May of 23, where we bounced from. And if you go back in our archives, when I was talking about this bounce looked somewhat bullish. It looked like it was 1, 2, 3, 4, 5, nice little five-wave move. It was like, whoo, maybe we're going to go breaking out. But then what happened after that move? We corrected, a lot of overlapping. We bounced, yet another lower high, overlapping, 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 overlapping. And we kept getting a series of lower highs with a ton of overlapping price action. So what was I doing this whole time we were grinding in this zone? I kept saying we need a new swing point low. We're going to get a swing point low. We need one to clean up all of this mess because this initially looked somewhat bullish initially, but then no, way overlapping back into the overlap chop zone. And then even it went back, we came back into the chop zone, lower high, back into the chop zone, lower high, started to break down. When I see all this, it's screaming you need a new swing point low to correct all that. Why? Because the prior trend was up, right? Was up, moving much higher. So the likelihood when you see this overlapping chopping, you need a new swing point. Well, notice this action from here, overlapping, series of lower highs. What do we get over here since then? Well, we got our swing point low we were looking for. And then since then, what happened? And a rally, came back, double bottom, if you will, maybe a slight higher low. And then we chopped, we grind, we overlap. We thought we were breaking out. We came right back down. We're getting yet another continuation of the series of lower highs. That continues from the previous one. These false breakouts. Every time it did a false breakout, it did, but it still went to a lower high. We pull right back down. And then the kiss of death for this to go much lower, that recent low up to that high, what did we do? We closed below the 618. That is screaming we're going to go down to these extensions toward 50. First things first. I said last week as this was breaking down, we're going to start to look to go at 60 and start to look for that 60 target. Once we close below 60, the writing's on the wall. We need yet another new swing point low. But speaking of that, does this look the same? I showed you from that May 23rd, May of 2023. We got that chopping overlapping. We desperately need a new swing point to clean that mess up. Well, since this 65 low, what do we need? 65, 55 low. What do we need? Chopping, overlapping, lower highs, continuing. So it's still screaming, we need yet another lower low to clean that mess up. So now be careful with this. Why? Because once we go ripping down the 50 zone, which I think we're headed, we're going to get a big reversal. Right? This could happen very quickly in a big reversal. I don't mean necessarily intraday, it'll dip down to 50, and by the time it closes, it'll be in the 70s. A big whipsaw within a day. I'm just talking about shouldn't take days and days and days and days and days just to slowly get down to 50 and sit here for weeks and just chop around at below 50 in this zone without getting a big whipsaw where we get massive push higher. Why? Oil refineries, including Middle East, etc., they can't survive on oil prices being below 60, especially when it's in the 50s or even maybe some upper 40s. That's looking for an instant breakout, something, maybe a war breaks out. They need that money to be up in the 60 and above for refiners, etc., to make money. So what are we bringing this up for? Emil, salivate country. We get that dip down to 50 and lower, I'm going long. And I'm expecting a quick, violent type of bounce when it does that. And I don't mean intraday, it has to do it in one day and one day only. It's a one-day sale. You got to sign up now. It's a one day only. I hate pressured salespeople like that tell you, well, your deal's only good for today. Well, then I don't want that deal. It's only good for the day. If it's not a legitimate deal that I could think about it and come back the next week, whatever, you get my point. This is not going to just chop down here for days, weeks, and months. once it gets down here, it is going to do a violent move higher. In my humble opinion, of course, but let's see how that plays out. So in closing, I've been talking about oil headed lower, sell rallies. Oil is expected to continue to grind lower. This goes back a few weeks now. Oil going to grind down to 60. And what have we been seeing since then? Pretty much that exact thing. It's been grinding lower, and we didn't quite reach 60 yet. We got down about 61. So not too far from that target, right? Stretch that out. We got awfully close. And even this rally is not like, ooh, yeah, baby, let's go long, because oil prices are breaking out. That's not what this says. This chopping, overlapping, grinding, grunting is screaming, could this go like that? Yeah. Maybe the war breaks out in the Middle East, they bomb some refineries, anything can happen, and oil prices go ripping. But the technical picture, we're going down. And we've been talking about it from that other week. Expect oil price to continue to grind lower. What is that? That is a beautiful grind lower. Then I gave you a target. We're likely going to go test 60. We break 60, it's over. We're going to then continue to push down toward 50, targeting 53.95, followed by 52.14. And that's just my rinse and repeat extensions. We start closing below that area, then we got 51.49. That's where my 50 target comes in. So we break 60, and I don't mean just like a quick little candle wick in reverses. That doesn't count. We're talking on a daily. We want to see a candle body. The body of the candle close below 60. Then the writing's on the wall. We're going to start pushing toward 53.95, 52.14, basically 50. Got it? And once we get to 50 or lower, I'm going long because I expect a violent push higher. Fair enough? So in closing, continue to sell rallies. And once we start closing below 60, I think we can then see some more major push lower toward the 54, 52, 50 area. And anything at $50 or lower is a great opportunity to buy some potential stocks, right? Some ETFs for oil, or some options, or trade futures on oil. Many ways to trade that. Amen. So I do think we're going lower, and my plan is to go long. Once we do break down to 50 or lower, that's a beautiful long, in my humble opinion, and we're going to get a quick response. Gold. Be careful with gold. It looks like it was breaking out. It's breaking out. It's testing. It's testing. Still got the series of lower highs. This is still chopping, overlapping off of what? We've been in an uptrend. Look like we got that three-wave move. Ever since the bottom, what are we getting? Series of lower highs, kind of like oil was doing, and overlapping, chopping, grinding. That's clearly still corrective. So I'm not trying to say I'm not a gold bug. Yeah, gold's going to 5,000. No ifs, no buts, no ands. In my humble opinion, we're going to 5. But I think we're going down further toward 31, maybe 3,000, 2,800 zone. Still looking for a big sell-off. So what is that telling us? What we've just been repeating the last several markets? Since the swing point low, we have a lot of chopping, overlapping price action with a series of lower highs continuing to manifest. So that's screaming higher probability we need a new swing point low below this 3140. Well, let me actually get that exact number on this platform. That low was 3120. 3120. So that fits the screen of all this chopping, overlapping. And typically when you see this, sometimes it'll make one last little aha. It's a head fake. We're going out. And then it'll plummet down. I warned you when gold was running up toward 3,500 that we'd get a correction toward the Magic Fibo. We fell shy of it ever since that bottom. This looked good. We got the big run up, beautiful three-wave move down, and that was looking bullish. Yeah, maybe we're ready to go breaking out. But even at that time, I warned you. I said, nope, I'm not satisfied with this pullback. It's not far enough. It needed to come at least toward the Magic Fibo. So since that bottom, we got what we're looking for, overlapping, chopping, series of lower highs, and still likely this rally fizzles and comes lower. And I'm looking for this to what? Make a new low so we can clean the chart up. So then we can go blasting off again. Amen? Any questions on that? So what are we learning today and every day? Try to get a little light bulb go off and say, when I get price movement and I see a lot of chopping, overlapping, grinding, grunting, laboring, series of lower highs, it's probable we need that swing point low, just like black gold did. And I think black gold Texas T is going to do it yet again. That's the plan. Amen? So any of these rallies should be sold and we get the correction. But let's go back and visit when gold, and this is in the archives. Oh, snap is right. Oh, snap. Go back in history. Don't miss a flash sale. How about that? 70% off. Good for 5 days. That's the Labor Day sale. If you want to get your subscription to TradingView. I only use TradingView not to actually trade from. I use it for my charting purposes. I trade both out of NinjaTrader, which we have the software available on NinjaTrader 8. Beautiful hook and the cross. Magic Fibo, we got our beautiful extensions. You come up here to our drawing tools. You drop down here, we got the MPA Fibonacci retracement, MPA extensions, which are the same ones you see in TradingView. Got all these levels loaded for you, preset, ready to go. And speaking of Tesla, Tesla is in the process of potentially breaking out. It's been holding the Magic Fibo, bouncing and continuing higher. We're just about ready to start breaking a new high. And we got another section here, but more importantly, from the recent high to low, guess who's sitting right there around 380? Guess who's sitting there? My 618. So I'll move this out of your way. A few dollars more, we break that 380 zone, 383.76. You see the price? Then it tells us what? In my humble opinion, Tesla's going to 5,600 zone, 528, 563, and likely even push if it gets real aggressive up towards 700. Amen. 650, 700. So needless to say, I'm long TSLL, 2x leverage, holding shares, and I've been accumulating more and more and more. I'm expecting this thing to go blasting off. One thing that's going to occur next week is Tesla now has their robo-taxi for the whole state of Texas. And I think you're going to see a lot of sales start coming in on robo-taxi. Yes, it's going to hurt the share lifts, Uber, Lyft, etc., because they're talking robo-taxi maybe as little as under $5 to get a taxi ride with the robo-taxi. And you open up the state of Texas, we have millions of people here. And it's, not only did it start in Austin right now, but it's pushing through the entire state next week, starting September 1st. And I expect to see this could potentially force us to break out. Indicators are still pushing higher. Yes, on this lower time frame, we're a little bit overbought, but the upper moves are still likely going to happen. And this price action, we got a rip higher. We've been overlapping. So this does not look like we need another push lower. We've been making a series of higher lows and starting to see higher highs, right? On this, you drill down. So it's the inverse of what we saw before. We got the move down, and then we've been chopping in this zone, but we're not doing a series of lower highs. We're starting to get higher lows. You start looking at that price action in a smaller time, starting to get higher lows and higher highs. And we're breaking out, so we start to get above that 383. Look out. We should go blasting off to 530, 560, continuation towards 650s, and even 700 up there. That's kind of the plan. And do we know what we're talking about? I'll bring Tesla up over on the charting platform just so I can show you from a prior move and what I have. And we'll go over here to Tesla. Let me type that in here. TSLA. And we said this a long time ago, back in October, when Tesla was going to make a move down here from this 200 level. It was going to make a move actually further. This is a daily, so let me go to like a 3-day or condense it a little bit more. When we talked about this in October of 24, we talked about this baby zooming toward 500. It went from 130 to 490. We talked about that going into 500. Go through our charting, and this is prior classes, and we go to October of last year, October 24th, if my memory serves right. Expect Tesla to hit 500. Consider the TSLL trade. Now, again, no buy, sell to hold, but these are some tremendous trades that played out beautifully. What happened to Tesla? It made that surge to 490, almost 500. And what did TSLL do? Check it out. It's a thing of beauty. So I'm expecting it to rinse and repeat. So you come over here to TSLL. What did it do in that same time frame? During October, you could have bought Tesla below 10 bucks in the $8 range. And it went from 8 bucks to 41.50. Not too shabby of a move. So you buy 1,000 shares there, you made from 8 bucks to almost 48, 41. So that's over 3,030 points, 35 points. That's not too shabby of a move. Got it? So this is getting bullish again, kind of chopping, overlapping, and we got the push higher. We got the correction. Now we're starting to make what? Highs, higher lows, higher highs, higher lows, higher highs. So I want to see it clear the Magic Fibo, take out that swing point, but you can see from the high to the low, we got to go a little bit higher. We still have this resistance zone we've tested a few times, but when we start closing above that 28 area, man, say hello to my friends up here, 46, 51. So just like in October 24th, we talked about that move. Well, ever since TSLL and Tesla got their corrections, I've been loading up on shares of this. And the more it chops and corrects, the more I kind of keep adding and adding. And I'm looking for this to go popping, major move higher. And I suspect when Tesla goes ripping to that 600 zone, last time it was 500, we fell just short. Now I think this next rip's going to go to about 600 or even higher when it's done. And this baby should go ripping up somewhere in that 46 to 50, maybe 60 range. We shall see, but that is the plan. And you'll see on here, we mentioned that back in October, mention it, but then you come into more recent action with TSLL, and we kind of gave you a zone. So there's a shortcut when you're on this page. You can do a Control F to find, and you look at this, and you want to say TSLL. I'll take that part off, but just leave TSLL in there. Delete all that. And then it says, we said back in October, but then you go higher And then we talked about here, Tesla TSLL is setting up again. That was back in February, where we started to buy some shares. And then we said, as this continues, Tesla popped early over 40% in 3 days. That was pretty cool. And we talked about it here. The more we reached the buy zone and we started drifting lower, and I went on to say, hey, let's keep adding. The lower it goes, man, keep adding some shares. Buy one, buy 10, buy 100, whatever your budget can afford. Consider it. Can't tell you what to do. But then after this pullback in February, on my birthday right there, February 26th, the lower it goes, we're going to buy some. It popped over 40% in 3 days. That wasn't too shabby. And roughly from 26 and about a month later, it had popped over 40% and then 3 days prior to that. So this is where I was able to take some cost amortization, take some profits on some of the lower bids and start the process again, building in a position for us to go where? Tesla's expected to go somewhere about that 600 zone. I'm expecting TSL to go to 45 to 60 range. And that was back in April. Well, it's been boring, right? You look at the trades and you go, wait a minute. All of this chopping, grinding has been just kind of sitting here. And I'm expecting to blow off, get some new highs. And what? Could it be September where Tesla starts to break out and this baby goes on a big run? Well, I'm in it to win it. I loaded the boat when we got down to these lows. I was like, man, incredibly opportunity for us to get in. Big run, retrace, next run is about to take off. And then when we finally get to 28, that's more than a double. When we finally start closing above 28, then we got another double coming. I like it. And this is 2x leverage. So when Tesla goes up, this thing goes up twice as much. Tesla goes down, you get burned twice as hard. So it is risk. Always trading risk. But my bias and the technical picture, we're going higher. Just like we did back in October of last year when TSLL made that run. So notice all these extensions in here are a part of NinjaTrader on the same chart. There's Tesla, extensions. Here's TSLL. Close that. I want to do this. TSLL, same thing, same level. Basically that 28 area, when we start breaking that, it opens the door to what? 46, 51. If we go blasting off that, 60. Yep. And it's very easy to do. Yeah, go up in here, you remove, click on it, remove that line, remove. So when you want to run a Fibo, you simply go to your drawing tools, go down to the Magic Fibo retracement, you click on the high, you come down to the low, and whoops, click it in there, and then you're good to go. So we've been grinding as of late, higher lows, higher highs, and we're going to clear the hurdle. We've been holding the Magic Fibo. This line right there, that yellow line is a 200 moving average. Everybody uses that on the charts. So I just like, once it starts closing above, we want to see us close above that, say, $28 range. And then boom, 75% chance we go into 46, 70 plus, we go into 51. And I like those odds. Amen? All right, let's continue. So we're on gold. Let's finish up. And gold says what? Likely going down. I would not expect this to go breaking out right now. But if you're just acquiring a position in gold, by all means, go to Costco, buy a gold bar. It will be worth a lot more than this price in the coming months and year, pushing to 26, 27. I can't give an exact date when it gets to 5,000, But what I did say on gold, where we were going, and I kind of got sidetracked with TSLL, etc. But those are some great setups. When this reached 1900, you can go back in our archives, and we talked about, hey, we're going to get a correction down to 1,000. And when we get to 1,000, we're going to go to 3,000. And it wasn't after the fact. When we were up here, I kept saying gold's going to go down to about 1,000. When it finally gets there, and I didn't know it would take a few years, like the timing, you can't say, well, it's going to be exactly December the 1st of 2015. So that would have been roughly about 4 years later. It's going to bottom and hit 1,000, and then it's going to take 7 years to get up to the 35, 3,000 range. But it went there. So pullback, 5,000, next run. Amen. So where's that pullback to? I still think it's going to come back down toward the Magic Fibo. I still want to see a new swing point low below this 31 change. So that's why I'm kind of thinking somewhere around 3,000, maybe 2,800. And I'd be careful with this, thinking this is a breakout. But if you're acquiring gold for the long haul and you don't mind seeing it dip a few $100s, fine, hang in there. But I like buying more in this level, adding to the position than just loading up here. Unless maybe I'm cost amortizing, maybe I buy a little bit of gold each week, each month as we pull back. And then we're going to look for the blow off top on the 5,000. Amen. So in closing, short term, sell rallies on gold because I think it's going lower. Once we get down here, then we talk about reload and hold gold. I have gold. I'm going to continue to hold gold. Absolutely. But I'm also going to add when we're down here looking for the next big run. Silver, SLV is the way I trade it. I warned everybody, even with that push, we're right in the resistance zone. So when silver finally made its pop up, I warned you about a correction. And what's silver doing? We rallied into the resistance zone. And what have we been doing since then? Chopping, overlapping, chopping, overlapping. So what is that telling us? We need a new swing point low. So what does this look like? This looks like an impulsive move down, which is an A. This overlapping chopping is a B, kind of an ugly B. There we go, B. And then we expect a new swing point low coming down in C. So my goal is to anything below 31 and lower on silver is a steal of a deal because you're going to get more than a double as we go higher. So I made a statement, not a prediction. Remember, I leave that to the prophets, but I made a statement a long time ago, and I'm still holding to it. Silver is absolutely going to get to $60, $70. No ifs, no buts, no ands. The technical picture is screaming we're going here. 75%, 70 plus percent. I say that is 100% in my humble opinion, but the rule is 70% up here, 75% to there. That's the rule. And why? From the high to the low, what did we take out? 618. I took out that battle zone and we closed above for even a monthly. We were above that zone. We're still in it. And I suspect we're going to go where? Up here. But I'm looking for, so we drill back down, I'm looking for current price action to fizzle manizzle and start to move lower as we get this initial move down, corrective B, that's the B wave. So try that B one more time. B, that was the A. So what's left, Mr. Tucson? Arrow, move lower in C, should at least get us around that 31. And I'm looking for, if we get a little extension, great. Maybe we get this as extension. So we go, what? We talked about this in great detail. When you got the high, you get the low, you get the 618, 786 retracement. If this turns out it's an A, B, C, there's the B, and we come down in C, then we should go somewhere about 32 to 3150 and stop there, bounce and get out of Dodge. If it turns out that in fact this is a 1, that's a correction for 2, and 3 is underway, then 3 must at least go to the 1618 or lower. And if we see the drop come in here and it doesn't hold in this 32, the 3150 area, and continues lower to where we get to 3050 or lower, then that's more likely a wave 3 down, which would lead us to another correction 4, and then one more push 5, and might get us down to this 28 zone or a little bit lower. So what if that happens? Well, I'm interested, Harold, right now. Anything below $30 is a steal of a deal to start adding to my position, buy more shares, and continue, rinse and repeat. And anything lower than that, the lower it goes, the more I want to keep adding, because anything below 30 or lower is a guaranteed double minimum. And the lower it goes, we might even get a triple out of this thing when it's done. Amen. So any questions? Again, higher time frame. Zoom this back from the high to the low. Why are we so bullish on this 60-70 target, $60, $70 target? Because from the all-time high to the COVID low, we broke the 618-786 zone and price action over here. So that's screaming 75%, we're going to 60, 70 plus, we're going to 70-ish. I like these. And this is a conservative target. Look at gold in that same scenario. Back in the same time frame, it topped out at 19, went down to 1,000. But ever since we broke the high, look, we went to extensions. 272, 1618, 272, 2618, and above. So what if, Harold, James, Ian, what if silver decides to catch up with gold and make a run toward that 272 or 2618 like gold has? This is the same swing point where silver topped out at the same time frame. The bottoms came in a little bit different, but the tops were the same. And silver hadn't even broken a new high yet. It's underperforming. But when it catches up, what if it does that? So go back to silver. What does that look like? Well, we already broke the pattern to go higher, sure. But what if we do try to catch up with gold and we make a push toward the 1618? That's in the $100 range. What if we push to 272? That's hundreds of dollars. 3, 5? Is that possible? And I'm not trying to tell you, well, buy now because it's going to 350 to 500 range. But that's why you see my 60 to 70 target, in my humble opinion, is a guarantee. No ifs, no buts, no ands, no exceptions. It's going to get there. It's like Prego. It's in there. Got it? All righty. Let's continue. Bitcoin. How about that call on Bitcoin? Huh. You mean you know how to trade crypto? Yes, I do. Yes, I do. Right, Ian? James? What did we say last week? Go up to the top. Don't make this stuff up. It's right there. Last class of the week was last Thursday. We talked about Bitcoin is likely headed to 110, 108 level. How did we come up with such a thing? ABC 1, 2, 3? Likely. Chopping, overlapping, grinding action. We needed a new swing point low. We got a low, we got a high. We broke the 618786, going to the extensions. There might be some interest in this, isn't it? Like clockwork. Didn't make this stuff up. This isn't after the fact. We talked about it in class. There it is. Go to that class, you click on it, you review it, and you'll see that's what we said before it got there. So off to Bitcoin, and we come back over here to Mr. Bitcoin and say, hey, Bitcoin, what's happening? What did we see? Zoom this in, bring this down. Talked about this. Bitcoin went right to the extension and then stopped. So from the prior high to low, we went right to our area and stopped. And ever since we had this chopping overlapping action, even the most recent high to low stopped in the zone, couldn't break it. See it? The green box, we bounced, stopped in that zone, couldn't break it. So we did what? Went to the extensions. Ian, how about that? Isn't that a thing of beauty? 110, 108. And what happened? Chopping, overlapping. This looked impulsive. That was an extended flat because it went on to make a double top / slight higher high, but it went 90% of the down move. And when we broke what? From the low to the high, we broke that 618, that 119 area to the downside. What happened? Boom. Green box, see it? 618 right there, 786. So that little green box, we closed below it here. And what did I say then? Likely going down to test these targets. We got a bounce to the lower high, could not break out, continuation to the extension. So from the low to the high, you break the 618, Harold, we got a 75% chance we were going to go to 110. Where did we go? 110. We had a 70+% chance we go into 108. Where did we go? 108. That's the beauty of this. So be careful. What if the Nikkei continues to sell off? Ooh, remember, this is global liquidity. Harold, we got a problem right now, my friend. We look like we were breaking out of that zone. Yeah, man, risk on, let's go. Now we're retesting. It doesn't look like it wants to hold. Huh. Zoom in. I mean, the day's not over with yet, but if this red candle body starts closing below that swing point, which is that line, see it right there, that dark line. So I'll put that red line on there to call your attention to it. So that's the prior breakout. We broke out, kind of went up. Now if we don't hold it, then we're likely going to go back and start testing a little battle zone in here around 41. We don't hold that, then we start pushing toward this Magic Fibo, which is around 39. It's sloping upwards. So we start cratering and going down into this zone and start seeking out our Magic Fibo, then ES is going to get pushed down, NASDAQ's going to get pushed down, and Bitcoin's going to get pushed down. Amen? Keep an eye on it. This is not something I use. I don't trade it necessarily. I use it as a barometer for global liquidity. I said this, when this starts breaking out, we would get all-time highs on NASDAQ and ES. What did we get? All-time highs on NASDAQ and ES. It started to break out. We get a pullback, they're going to get a pullback. Then we go busting up. So I can assure you again, you see Nikkei start ripping into 48 to 52,000 range. Then ES is going to be at 6,600 and above. NASDAQ's going to be upwards of that 25 to 26,000. It's risk on or risk off. So when you start to see Nikkei struggling, global liquidity evaporating, the more it goes down, the less liquidity. The more it goes up, the more liquidity, risk on, risk off. And that kind of sets the tone. That's why Harrow circling the wagons. I did ES first instead of the usual. We did the markets. We've been on for a very long time. This is struggling right now. A lot of overlapping. We got lower highs, lower lows. So if we can't hold this support zone, you close below 6,400, we're going down to 6,300. Targeting 63.45, 63.28, and then 6,300. If we do go breaking out, then we'll start targeting the 65.06, 65.14, en route to 65.30, 65.50. Got it? So let's see how that closes, but I'm a little bit more bearish, especially if Nikkei continues to sell off and can't hold this support zone, then it's likely going to go lower, which means ES is likely to start breaking down and make that move to do a new swing point low, and we'll go down to about 6,300. Okay? NASDAQ, same thing. It's testing the zone. It's still getting a series of lower highs and lower lows at the moment. So this bounce, is it going to go breaking out? We got to get above this target zone. From the recent high to low, that's the resistance zone. If this rally cannot go breaking through to go higher, then we're likely going to get another swing point low and push us down to the 23,022-ish area. So what happens if Nikkei continues to break down? This is going to break down with it. What if Nikkei goes breaking out? This is going to go breaking out. Period. End of story. Amen. All right, let's finish up. We did gold and silver. Talking about Bitcoin now. Again, I like Bitcoin futures because you get consistent pricing where Bitcoin, you notice this, you look at Bitcoin dollar and everybody sells it. They got Bitstamp and Coinbase and Index and crypto and Binance, and there's just hundreds of these brokers that sell Bitcoin, and none of them have the same price. It varies pretty substantially between these different brokers. But if you go to Bitcoin futures, that is regulated by the CME. So it is a regulated price where the other ones vary. So I do like to look at both, but this gives me, why do I always look at futures? Because you get full-time price action where our indexes close and reopen. Not to say Bitcoin does it, but the price varies. That's why I look at both. And notice the difference. Not a huge difference, 790 to 680, about $100 difference in the pricing between futures and this current Bitcoin we're looking at. But the technical picture is still the technical picture. So, Mr. Tucson, is this over? Might be, you know. Is that my A, that's my B, and that's my C, and that's it? We reached the extension, we're ready to go breaking out? Or do we need more downside? I would even prefer if we do get another swing point low and we get the sell off with our ES, NASDAQ, etc., and we get the sell off, the Nikkei, they all pull back, pulling Bitcoin down. Remember, global liquidity, risk on, risk off. If it breaks down, our market should break down, including Bitcoin should break down even further, and we'll get a little bit more downside. Then I'll look for a next big push. Any questions on that? But boy, was that technical picture screaming we needed to go to 110, 108, and that's exactly what we saw. Amen. Went to our extensions beautifully. Now, is that the end? Maybe. Or watch Nikkei. Well, Gary, what in the world Nikkei has to do with Bitcoin? It's the global liquidity, risk on, risk off. And if our markets pull back, Nikkei pulls back, our markets will pull back, and Bitcoin will pull back and come lower. I do have IBIT calls out to October. So I can't tell you what to do, but let me get my IBIT in here. There it is, IBIT. I got some IBIT calls Actually, it was up here. I do have iBid too, but one I was referencing was this one. Actually, is Riot. Let me come back down to Riot. There it is. Riot calls, and they're still holding up. Bitcoin's pulling back, but look at Riot. Huh. How about that? We talked about that, Emil. 14 call option going out to October, and that you could get well under $1. I got filled about 75 cents and gave you several days to ponder that thought. And that based on the high to the low, we'll just run this fresh, high to low. We're not even there yet. We're just kind of testing it. But here's the 1350 area. Up to 1430 is the uprights that we need to clear and hurdle. But anything closing above that 1350 area with a candle body, not a wick, starts to say we have a what? 75% chance we can go to 16, 70 plus we can go to 1660, and maybe a little blow off top toward 18. And I was telling you this when price was down here around $11, $12 range. Buy that 14 call option out of the money, under $1, and they look for this to make a run at least to 16, maybe 18. That's the technical picture looking at this. And what I like about it is I said that over here, that even though Bitcoin was pulling back, Harold, this was actually holding up very nicely. How about that? Bitcoin struggling, and yet this has been holding and climbing as Bitcoin was dipping. I like it. So imagine when Bitcoin finally bottoms and reverse and goes ripping. The miners are going to continue to rip. Any questions? So no buy, sell, the whole recommendation, but that was something you had an opportunity days and days ago to take advantage of it. And is it over? No, we're still going. But you're more into the money now, so they're going to be more expensive, but hey, it's up to you. That's why I was talking about it here. It's holding up beautifully. And it dipped down to my 75. I got in a little bit higher and I added some more down at 75 cents and my order got filled. And as soon as it got filled, it started reversing. I like those calls. Amen. And what else is this? From this recent low to the high, guess where we were bouncing off of and holding up? Huh. You think there's any magic in this 618786 idea? Right? Low, high, retrace, bouncing. Still think we're going higher. Once we start to clear 1356, 1430, then at 75%, we go to 16. What's it going to do with my out of the money call options that are now at the money and go up to out of the money, right? Boom, well into the money, up to 16. I'm liking it. Any questions on that? Well, I want to finish up with the crypto side of things. And remember this quote that Bitcoin, yes, it could dip a little bit more. If our markets dip and the Nikkei dips and we dip, risk off, we'll probably see this dip a little bit more. But then when it bounces and starts ripping, I still think we haven't topped out for the end, and that's the end. Blah, blah, blah. That's all, folks. It's over. I still think what I said way back in 2022 when Bitcoin bottomed. Let me bring this into perspective. You know what these blue lines are? That's the Bitcoin halving. And we through multiple halvings over the years. Blue is the halving, and 16, 20, 24. Next halving is in 28. We had another one back here in 12. So this is our fourth Bitcoin halving, which post-halving, it goes on a 12 to 18 month run. Post-halving, 12 to 18 month run. Post-halving, 12 to 18 month run. Post-halving, 12 to 18 month run. That we would target 150 to 170. And back here in 22, when it was bottoming, I made some bold statements and I just said, hey, Bitcoin at 20,000 or lower is a steal of a deal. Absolute crime, if you will, to have the opportunity to steal that type of potential at below 20,000. Boom. And we're not done. Still think we're going up to that 150, 170 area. Till price proves otherwise, we're headed there. So be careful. We might get a little bit more of a dip, but it would give us a nice big run as we dip and get the next run. What I'd be watching and where would we likely to go from the recent low to the recent high up there. We want to look at our support zone. So let me go to a 3-day so I can stretch this out a little bit more. Actually, I'll do the weekly and just condense it a little bit more. So from the recent low, and I'm going to take some of these other lines off 1 second while I do that. As you look like, well, Gary, all I see is lines everywhere, man. It's colored lines, colored boxes. What is all that? Move some of these things out of the way. Take that out. Take this out 1 second, and I'll do a fresh one for you. But from this recent correction, low, up to the current recent high, if we don't start holding the support zone, which is where we broke out from, right? We tested, failed, corrected, started to break out, retest, and finally popped. We're retesting. If we don't hold this zone, which we're in now, we come back and test the support zone. We break that, then where are we likely to go? 99, break just under 100,000, or maybe 93. I wouldn't mind seeing this sell off with the markets, a quick little 618 retracement to set up the big boom shakalaka toward the upside. And let's just see where those targets would come into. You do a 3.2, swing point low, swing point high, and we pull down to that 618 zone. Where does that put us? Wow. Look at that. That could put us into the 140, 150, 170. Does that sound familiar? 150, 170, Harold? And this is just recent price action that gave us this target we talked about in 2022. Bitcoin was going to 150, 170. Emil, doesn't this just like scratch your head and go, huh? That recent low to that high. And if we pull back here, that's setting up the extension to go right where we said back 2022, 150 to 170. Wow. Awesome. What else we got going for us? Software. We love the software. NinjaTrader, Bitcoin. Getting a nice pullback. What happened? The daily cycle. Guess who got a weekly hook and a cross? Who got a weekly hook and a cross? Anybody out there got a weekly hook and a cross? Emil. Weekly hook, weekly cross. Steep slope, angle separation. What happened the last time we got a weekly hook, weekly cross? Steep slope, angle separation with that prior move down. Boom. Cycle up. So what are we expecting? Daily's already in oversold territory. Could we go a little bit lower? Yeah. But what's this weekly going to do? Slingshot. Like over here, slingshot, slingshot, higher and higher and higher and higher. Continue the slingshot phenomenon. Slingshot, slingshot, slingshot. Got it? So what do I expect this to look like? I'm going to paint the Picasso, and this is in NinjaTrader 8. This is going to turn up. Red's going to turn up. Blue's going to turn up. Green's going to turn up. These trend momentums are going to turn back up. Both of them going to turn back up. And price is going to go breaking out toward 150, 170. And that baby is going to slingshot higher. In the interim, because the weekly hook and a cross right there meant the daily was going to cycle down. And what did the daily do? Overbought, slingshot up, slingshot down. Ultimately did what during this ABC correction, Harold? Cycle down, cycle down. How about them apples? Now what's coming in the days and weeks? Cycle up, slingshot, 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 start breaking out, stair step its way, onward and upward we go. That's the plan. So back to the charting. And yes, we could go a little bit lower. I'd like to see it go lower. But why would you want that? Because then I can add more to some of my IBIT or some of the leverage products if you want to do the IBIT or some of the leverage products. ETHU. I have that with Ethereum. I have a lot of these. So what are we looking for? What did we talk about with Ethereum? Part of a correction. It's breaking out, reached our extensions. A little bit of a corrective action after extension. Would not be surprised, which it kind of already did it. It kind of retested the breakout and popped. And now it's just grinding, but maybe we get a little bit more correction. We do a pop, and that opens the door to the 5,700 next, because we already reached this one. So 5,700's up here. And I made a statement when we got this big pullback on Ethereum. And I said before, I would expect Ethereum at least to retrace back to 4,000, retest it. We did it. And at that statement, Harold, when ETHU was down in the lower numbers, I said it would make a run. And when it did, what was ETHU going to do? It would go into the 1618786 zone. What did it do? From 20 bucks to 180 bucks. Not too shabby. So what if Ethereum goes breaking out to that 57, 5,800, maybe even pushing 65, 7,000 range? I think this is going to start pushing toward that 280, 300 range. Amen. Leverage product cuts both ways. If Ethereum sells off, this baby's going to tank. Ethereum goes ripping like it's been doing. It goes ripping. So, yep. This is a little underperforming since this recent swing point high. The sell-off, Ethereum is retesting the highs, where this one's a little shy. It's in the 618786 zone. So if Ethereum, see what I'm talking about? From that high to this low, we're in that 618786 zone we discussed. But Ethereum from that recent high to low is already starting to break out a little bit. So it's underperforming. But what if we continue the party and we go up toward that 1618 level or even higher, 5,000? If we get towards 7,000, that's off this bigger move. 7,000, see, from the all-time high of last crypto run to the low in October, like Bitcoin. Great time to buy. Likely going up here from the high to the low. We're taking out the 618786 zone. See it? That's from this recent crypto high of the last cycle, last halving, to the low. We took out 618786. You can see we're above it. That's a candle body. This is a weekly, so not only a daily candle, but weekly candle bodies. So what does that tell us, Harold? We got a 75% chance we go on to 54. 70 plus, we go on to basically 6,000, 5,950, and likely might even push towards 7,000. We shall see. But what if Ethereum makes that last run and we run up another $1,500, get to that 6,000 range? Where do we think that's going to be? 1272, basically, pushing that. Maybe we go higher. but this is a pretty high probability we're going to get to 6,000. What does that do at ETHU? Well, remember what I said, that we go back to 4,000, we'd get to this area. We did it. And now we go to 6,000. We should start pushing this previous high, so we're around the 200, 250 range. And if we can pop towards 7,000, then I think this will actually go up toward the 148, 1272 area. Amen? So I'm still very bullish ETHU. I'm in a position of authority. I kept adding and adding and adding. Yes, there was a splitsy. I didn't like that because I had hundreds and hundreds and hundreds and hundreds of shares. And then all of a sudden we got 5 shares per 100, 1 for 20 split the wrong way. But even with that split, I'm up massively on those levels because we went from 20 bucks to 180. I like it. And my break even was about 60 something, 70. So I'm more than double that right now. And I'm looking for triple, quadruple on those shares. And way back before the splitsy, we talked about buying it at 4 bucks and it went up to 12 bucks before the split. Boom. Took some profits, took the house's money, reinvested. Looking to go more. So I don't think this is over. Definitely be in a position of authority because anything's possible. But Ethereum starts breaking out, move toward the high probability targets, which is, like we showed you, based on price movement, based on the correction, we're likely going where? Off of the prior high, all-time high, from the prior move. We should go up to 55, 6,000. Maybe we push it towards 7 and change. When we start getting in the 6,000 range, I'm going to be starting to take some profits on this, and I expect this will be somewhere in that 200 to 250 target or higher. Got it? And the closer we start getting to the fall, September, October, where the 12 to 18 month run is coming to an end, I'm looking for this thing to obviously give us a massive pullback. When the crypto winter comes back, every year Bitcoin sells off, Ethereum, etc., and we rinse and repeat. So what have we learned on Ethereum and Bitcoin and these over the years? ETHU is a new entity, but for Ethereum, we buy in 22, we sell in 25 later this year. We're going to buy in late 26, and we're going to sell in late 29. We rinse and repeat, rinse and repeat, rinse and repeat. And the year before that, the big crypto run was in 2016, 12 to 18 months later, ran up. We got a low in 19, and we started buying then to then run into 2021, topped out, got the pullback into 22, rinse and repeat. So we top out in 17, we top out in 21, we're going to top out in 25, and then we bottom in what? 22, 26, over here was 18. Roughly every 4 years we bottom. Every 4 years we top out. So that's why, just like in October of 20 down in here, we talked about this, where it was a great time to buy this 22 pullback and then sell in 25. We did it with Bitcoin, etc. Everybody got the pattern? So we're going to sell in 25. We're going to buy in late 26. We're going to hold it for 3 years into 29. And we're going to keep rinse and repeat, rinse and repeat, rinse and repeat, rinse and repeat. And with that, let's finish up real briefly because we spent so much time on it with the dollar index. I still think we're going to break lower. This move, 3-wave up. We're chopping, grinding from the recent low to high. We took out the 618-786 zone, and all we're doing is chopping. So all roads lead to downside pressure, 96, 96.30, looking for a new swing point low for the dollar index. And as that continues to occur, I'm looking for Forex, euro dollar, Buy the dip, we're going higher. Pound dollar, buy the dip, we're going higher. And boy, did we set those up. This bounce off of here, beautiful move higher. From down at 130 up to 136, 500 pips. We got a nice little pullback. The bias is as the dollar breaks down, these two currency pairs are going to break higher. So I have two targets for the pound. First one's the 136, 136.50, 36.50 area. Then we shoot for the next section, 38.80, 39.60. And what is that from? High, low, broke to 618. We're going up to that target. When we start breaking that, we have this high to that low. We took out the 618. So that says we're going where, Harold? 75%, we're going up to 38.80, 39.68, about 70% chance. So first things first, keep buying the dips till you get that 36.50 area. Then we're going to start looking for next target 38.80 area, followed by the 39.60 area. Got it? And then the euro already have the same type of move. From the recent high to low, we reached our extensions. We rinse, repeat. We talked about this way back when we bottomed down here. Went in, we buy the dip, reached extension, buy the dip, reached extension. So what is the euro showing us? As the dollar breaks down, the euro dollar is going to go higher. We got the reversal. We set the software in advance, days and days in advance. It bought. We're up 300 plus pips sitting there chomping, and we're ready to go where? 1890, 1950. Most recent high to low. Took out the 618. That's targeting this between that 118 to 118.50 to 119.50 is my target zone. And we still have upwards of 300 more pips to go. And you're up 300 here, you're going to get 300 more coming. So any big dip should be bought, and look for this to start moving toward that 118.50, 1.1850/119.50. Amen? All righty. So take care. God bless you. We love and appreciate you. I'm humbled and honored to be your mentor and instructor. Join us again tomorrow. That's it. That's all. We'll see you tomorrow.